Hello everybody. So today I want to talk about PayPal and StoneCo and kind of compare both stocks and tell you why there is one of these two stocks that I very much prefer. So PayPal needs no introduction. They have 400 million consumer accounts, right? Mostly legacy consumer accounts, I would argue. Most of them were habits that were started really in the days of eBay, when PayPal was really big on eBay and when eBay was much bigger than it is today. And it has since tried to morph into a more all-encompassing, all-inclusive payment system where you can pay on all sorts of websites. And of course, today PayPal is quite successful. It is in a lot of places. And also in a lot of countries, which I think the international focus of PayPal is what makes it great. They process $1.4 trillion of total payment volume, which is quite a bit, not nearly as high as the Visas and MasterCard, but it's not directly comparable. And they hold different currency and they're in different markets, actually 200 different global markets. That's PayPal for you. Now, if you don't know about StoneCo is pronounced STNE. It's a payment terminal for small businesses in Brazil. And you may think this is a very niche thing. This is a very odd stock to compare to PayPal. Well, not really in my view, because they're in the same industry. They process transactions, but there's a lot of reasons why I like StoneCo the best, because I don't understand why StoneCo is so cheap, as you'll see in a second. But StoneCo is doing very well, and their revenue growth is actually 28% over the past 12 months, and it's projected to grow much more. So let me just get into the financials and talk a little bit about the financials, because as you may guess, PayPal is not growing very much. PayPal is a value stock. So if I look at my way of valuing stocks, for example, this is the enterprise value over gross profit over revenue growth. This is my usual way. You're used to the spreadsheet if you know the channel. This is my usual way of valuing stock, and I'm asking how much am I paying for each 1 percentage point of forward growth next 12 months, right? Next 12 months forward growth, how much am I paying for each percentage point? And when I look at a stock like PayPal, even though it's dirt cheap, I'm still paying quite a bit, almost as expensive as Tesla for that forward growth, because there is next to no forward growth priced in, right? 8%. In my view, that means that the business is not growing, the business is shrinking compared to the increase in money supply and the size of the money supply. That's A. And then B, a business growing at 8% in the space of digital payments, that's really slow growth. I mean, this is a business that's essentially growing at the pace of the economy, in my view. And their gross margin, for the payment space, I don't think PayPal's gross margin is actually that high. I think there's much better gross margins in the payment space. And, if I look at my metrics, for example, enterprise value over gross profit, PayPal is still 2.5 times more expensive than StoneCo, almost 4 times more expensive here on forward gross profit. And of course, as far as the valuation, in the way I calculate valuation, this stock, PayPal, is 12 times more expensive than StoneCo. And if you look at StoneCo revenue growth, right, predicted over the next 12 months, 39%. I actually think that's a little low. I think they'll get closer to 45% per my calculation. But 39% is what I put in there as the analyst's estimate. My estimate is closer to 45% for them, based on the acceleration that we saw in the last quarter. And of course, StoneCo is a $3 billion company. So when you have a stock that's $3 billion, you have greater odds, in my view, of getting a multi-bagger than, say, when you have a stock that's trading at $55 billion, trying to get back above $100 billion. If I look at StoneCo, they have a much higher gross margin. So if you look at growth, StoneCo wins on growth by a long shot. But let's look at value, right? Because PayPal is a value play. But here, you see, this is what I don't understand. There's a lot of payment plays out there that are actually very valued right now, but have a great value. And I think StoneCo, to me, is the king of value. When I look at the value of StoneCo, let's look at what traditional value investors look at, like PE. You may know I don't look at PE. I much prefer EBITDA on this channel. PE, I think, the E is for paying taxes. That's what it's useful for earnings, in my view. But anyways, the forward PE for StoneCo is 11.7. For PayPal, it is a 10.1. Roughly the same, a little more expensive for StoneCo in traditional metrics. But if you look at price to sales, significantly cheaper for StoneCo compared to PayPal. And if you look at price to EBITDA, the StoneCo price to EBITDA, that EBITDA yield is nearing 30% for StoneCo, right? You're on enterprise value over EBITDA of 2.76. And PayPal is above a 10 on enterprise value over EBITDA. So StoneCo is a stock that is left for dead. I do not understand why it is so cheap. And in fact, if I look at StoneCo, if you look at the stock chart, I don't do technical analysis, but if you look at the past year, StoneCo has been the most stable thing. It's like you see stocks who drop, and it's a roller coaster. You have some stocks, and it gets really the emotions out of you. You have some stocks that are very emotional sometimes, where the stock is down 75%. Stock I covered yesterday, STEM, right, is down 75% compared to the beginning of the year. StoneCo's been flat. StoneCo's been flat, left for dead, $10, $12, depending on the month. But it's a flat stock. And in my view, it will not stay flat for a long time because StoneCo has a lot going for it. Even in debt, if you look at debt, StoneCo almost has twice as little debt as PayPal. PayPal has actually more than $10 billion worth of debt. So just something to take into consideration. So StoneCo also wins as far as value goes. So StoneCo wins for growth. StoneCo wins for value. And I'm also sure that if you were to take a lot of newer, growthier names in the digital payment space, they would also win on both metrics. And I can think of Adyen, for example, as an example, which is a stock that I don't own either because I'm trying to limit myself to one stock in the payments space. I don't want to have too many. So I really want to like PayPal. I understand the narrative behind PayPal. People say, hey, PayPal, if it gets back to a decent multiple, a long-term multiple that it's had for a while, it's going to be a 2x. Well, what I want to say is for 2x upside potential, I see a lot of risk with PayPal. Because for a 2x upside, well, you have the competition, which is now becoming pretty serious competition of Google Pay and Apple Pay. Right? Whenever I buy something on my phone now, it's Google Pay who just shows up every single time. It's so easy to use Google Pay. It's not even funny. It's very easy. I assume if you have Apple Pay, it's the same. It's extremely easy. So will online payment move to the big players that are Android and Apple? Maybe. We'll see in the future. But if I look at, say, Venmo, for example, which was one of the main reasons why the stock rose a few years back. Venmo, in my view, if you live in the US, you may know that Venmo is simply not winning against Cash App. The Cash App is so powerful in the US. It's so much stronger than Venmo. And even if Venmo is used for things like sharing or splitting costs with friends, nowadays, most credit cards, most banks allow you to split costs with friends and family very easily. So it's just not a Venmo-only thing anymore. And Venmo is a missed opportunity, in my view, for PayPal because Cash App just went ahead and took the competition. They have a lot of new competitors, as I've said a second ago. Adyen and Global E are two of the main competitors that I think that are the newcomers in the space. But you also have dLocal for larger companies to a lesser extent. And the stock is growing at the rate of the economy. Why? Because this is a stock that's trying to defend itself. This is a stock that's trying to defend its moat against the competition. And I think it's fine. I think they'll do fine. I think they'll defend it likely for decades because businesses have inertia. But all businesses have inertia. A business like StoneCo, for example, who has just over 3 million clients, 3 million customers, 3 million payment terminals in Brazil, that business is going to have inertia too, right? Once you get that payment terminal, you have it for 5, 10 years, right? 5 years, they get it renewed. Once people have habits, you have inertia. Once your customers have habits of using something, you have inertia. And the question is, when is the stock done growing? When I look at a stock like PayPal, I tell myself this is a stock that's done growing, and you're taking a lot of risk for a 2x, in my view. Qualitative assessment of the risk. If I look at StoneCo, though, if StoneCo gets back to its all-time highs, which is often what people think PayPal is going to do, get back to the all-time highs, I just want to point out that it's not a 2x that you're looking at for StoneCo, but you're looking at 10x if StoneCo were to go back to its all-time highs. If StoneCo were to go back to 2019 type highs, so more normal highs, it would be closer to a 4 or a 5x from here. But the main difference, PayPal is growing at 8%. StoneCo revenue growth was 32% year over year, predicted to be 39%, and I say 45%. We'll see. I tend to be very optimistic. I'm optimistic on growth, but you know, sometimes a little too optimistic. But still, this is more than 30%. What I love about StoneCo is not only have they growing revenue, you know, people using the payment terminals more in Brazil, those small business selling more stuff because the central bank dropped interest rates. So the economy is going to slowly get back into growth mode. So more stuff will be sold. These are transaction volume businesses. But they're also growing the number of clients. They have a very effective sales team and way of selling, a community-based. If you follow StoneCo, you may know they have these stores in communities to help small businesses. They have a community-based way of selling the product and selling the business. And I find it fascinating that while revenue growth grew for 32%, they've recruited new clients. So there's new terminals at a rate of 42% year over year. So 42% year over year. Of clients have had more terminals. So, you know, as these terminals get brought online and get used more and more, the acquisition of new clients funnels through the value chain of a company like StoneCo, and then shows up in the revenue, right? It starts with getting new clients, and then those clients using the product, and then you get revenue, right? And you create those habits that have inertia for the long run, right? Just like the PayPal habit, you know. Using with PayPal, if you've been using PayPal for 15 years, you're going to keep using PayPal likely for another 15 years. Yeah, these businesses have inertia. And StoneCo, what I like about StoneCo is, unlike PayPal, who has competitors left and right, when I think about StoneCo, in my view, they have one competitor, which is actually quite a bit older and not seen as the freshest brand in the space. Their competitor, of course, is Securo, if you follow the space, is the main competitor of StoneCo. But they are more of a legacy tech company, if that makes any sense. And StoneCo is more like a newer tech company. But in my view, if I look at Brazil, their main business, the main thing they do is take business away from the banks, from the banks, the acquirers, right? The banks processing the payments. They're taking business away from those banks together. And I actually want to point out, I did a little more research on this, because you know, a lot of people on Twitter say, "Oh, Mercado Pago is competing and StoneCo is competitor." Well, actually, when you look, if there's a little bit of competition with StoneCo, but when you really, you know, peel back the onions, and I'm obviously a shareholder of Mercado Libre as well, and I believe this is one of the top stocks in Latin America. My Latin American positions are Mercado Libre, Nubank, and StoneCo. But as far as Mercado Pago goes, it's worth noting that they are a competitor against StoneCo, but in a very tiny space for StoneCo for phone payments. They're a competitor for what I call micro or nano businesses. You know, for tiny businesses. You know, somebody selling, I don't know, somebody selling food in the street, you know, on a bike, that kind of business. That's for whom the phone payments is. And Mercado Pago is going heavily after this nano business market. StoneCo has a product, but it's not a major product for StoneCo, that micro business market. It is where Mercado Pago is going, but StoneCo, yes, they're competing head to head, but it's only a tiny overlap of the business, if that makes some sense. StoneCo focuses on more established small businesses, on bigger small businesses, right? That's what StoneCo does, which is why they have 3 million of them. So anyways, and I'll conclude with this. One may say, you know, oh, investing in Brazil, you know, it's too niche, it's too specific. Why would anybody want to go this specific? Well, I think Latin American companies are very heavily undervalued. And we have much more transparency with Latin American companies than, say, a lot of Chinese companies, which is why I like Latin American companies better. I also think if you are a Western investor, you know, which I am, I think Latin culture is much closer and much easier to understand for an outsider, and so e-commerce and the habits and it's closer, and so I don't have any problem with Brazil as a market. I think it's a very interesting market, and many Western companies have actually failed there, right? Amazon is a great example of a business not doing too well against Mercado Libre. But not only, right? Shopee, C Limited didn't do too well in Brazil. So that the uniqueness of the market, I think, creates a moat, even though I really don't care about moats in my businesses. I believe businesses that innovate do not need moats. If they keep innovating, if they're always a few steps ahead, they don't need moat. But that creates some sort of a protection for a company like StoneCo. And I am accumulating this stock while the market is ignoring it. Because when revenue keeps growing and growing, quarter after quarter, right, is this stock ever going to trade at a 0.5 times revenue? Right? I don't think so. I think it will trade at a multiple of revenue, which if we assume is constant, we assume that multiple of revenue, right, price to sell, we assume that to be constant. If it is constant, yet revenue growth keeps going at 45% year over year for a few years, the stock should rise by as much as this. So I am currently increasing my position in StoneCo. I think the stock is cheap. I look forward to Investor Day on November 15 and to their earnings, and I'll be reporting on that. Sorry, PayPal. Maybe the new CEO increases the growth and I'll look again at the stock. But unfortunately for me, even if it's so cheap, I'm still not jumping in PayPal. So this was not investment advice ever on this channel, just entertainment. I appreciate your likes. I appreciate your subscribes. Thank you for watching and have a wonderful day.